These clients made over $3 million from one decision in less than 6 months, but the real benefit that they got was worth so much more than the money. So these guys were in their mid-30s. They'd worked hard to get in the position that they were in, but they'd also got a little bit lucky in that the company that he worked for had really shot the lights out in terms of how it had grown. He got some shares early on when he joined the company, and that value of those shares had gone up well into the 7-figure territory over the time that he'd been there. Now, a big chunk of these shares became available to sell, and in the 24 months immediately before this, the share price had been going up and up and up. So when that decision became available to them, they were really agonizing over it because part of them wanted to cash out, but another part of them had that FOMO where they didn't want to miss out on the future gains. And so they were seriously considering not selling down as many shares as they could so that they could benefit then from the future gain. Now, we spoke this through in a bunch of length, but ultimately the deciding factor came down to, as a result of us talking through what that money would actually be used for and what that would mean for them and their life. These guys already had some good investments in place. They had a couple of investment properties, they had a nice share portfolio, and that had been built up from selling down other shares as they had become available to them in the future. But they really wanted to buy their family home, and they realized that this money was going to actually allow them to do that and have some change left over so that they could have a little bit of money for investing. Beyond that, they still had more shares that they knew were going to be coming available to them in the years ahead, so that they knew that there was going to be more investing potential. But essentially, by cashing out these shares, they could buy their home, essentially do it debt-free, and still have a little bit of money left over for investing, which meant that most of the important stuff for them was covered from a financial perspective. So they ended up buying that home, and given the run in the property market, they made a bunch of money over that. But the real benefit was the fact that shortly after them selling their shares, there was a big correction in the tech market, and the value of their company went down by about 35%. So that equated to over $3 million worth of benefit that they got from taking that cash off the table when the valuation of the shares was actually higher. Massive benefit to them, on top of the big benefit of them owning their own home so that they could set up the future for their family that they wanted. Now, the lesson in this one is all around FOMO, because it's really common when you're sitting on an investment that has been going up in value, that you feel like you want to ride it and it's going to keep going, and you're going to get more and more and more benefits, and you don't want to exit because you don't want to miss out on that. But the reality is that as easily as shares can go up, that they can go back down to earth. And when you get to a point where you've got enough money to do stuff that's really important to you, you want to lock those gains in, and then you can reload and set up for your next move. So if you're in this position, whether the numbers were as big as they were for these guys or if they're a lot smaller, the lesson is the same and the approach should be exactly the same to make sure that you're actually benefiting and not putting too much of your cash at risk.